Hey everybody, it's Chuck Barone. Friday, November the 3rd, 2023. Let's wrap up a wild and wacky week. I gotta say though, a good week for the Fed this week. Things finished out in their favor. Rates coming down pretty dramatically in the bond market. Stocks rip-roaring the last couple of 3 days. And it looks like maybe the Fed really believes the worst is over on this inflation stuff. I got to see it to believe it, guys. You know, I just would be shocked if it was this easy to get rid of a pretty significant problem. But we'll see how it all plays out. We're going to be here to bring it to you guys. Anyway, before I get rolling, and I do get rolling, let me take a second, welcome everybody to the show. And as always, thank you guys for your support. You guys watching the videos and hanging in with us means the world. We appreciate you guys. We really do. All right, so let's talk about markets today. Today we had really early, the jobs report comes out, and it came in less than expected. Pretty lukewarm, actually. The number coming in at 150,000 jobs created last month. They expected 170,000, so actually the expectations were higher. That's been pretty rare on jobs. And last month's result, 335,000, was revised down to 297,000. Now they're already, everybody's got their explanations. The bulls say it's a seasonal thing. This, the big UAW strike affecting it, and blah blah blah, boop. Bottom line, bad news for the economy, good news for the Fed. It's just the craziest upside down friggin' nutso world I've ever seen, where bad economic news makes the market go up, and good economic news spikes rates. It makes the market go down, I gotta say. They said we're living in an upside down world. Here's your proof, right? So look at these markets today. Stock market today. Dow Jones Industrials up 222 points, settling at 34,061 points. NASDAQ up 184 points, settling down 13,478. And the S&P, the broader market, up 40 points, 4,358. So another day, I think it's 3 in a row now. Hot market days, stocks roaring. You don't have to be scared of looking at your statement this weekend, right? Markets having a good reaction. I think that I'm going to have to see a little more evidence to buy into this. Inflation is going to come down to target where we are on these rates if we just hold them steady. Call me a skeptic. I got to see it to believe it. But the bond market certainly believes it. The 10-year today plummeting down 12 basis points, 4.55%. Now, it was just a very, very short time ago that this 10-year bond was looking at 5%, 4.98%. That is a very, very, very substantial move in the bond market in a very short time. The 2-year today comes down 13 basis points, even faster. Now sitting at 4.84%. This was just well over 5%. So rates really coming down. Bond market believing the worst is over, I guess, with rates. I don't know. We'll see what happens with these rates when the Treasury gets in this market soon. But as it is, bond market rallying, and we really need it, man. This could be the first time in the history of these markets, a third consecutive year of losses in the bond market. Never ever happened before. The dollar today, well, with the idea that rate increases are over, the dollar losing a lot of its strength, coming down today more than 1 full point, sitting at 105.07 on the index. It's still a decent number, but wow, what a difference a day makes, right? But we've talked about it on the show a million times. Hot jobs was the Fed's #1 target. They believe that this hot jobs creates wage growth, which creates more demand, which creates inflation, right? It's the chain reaction. So they're going right after it, and these jobs numbers coming down, unemployment numbers higher yesterday. So it seems like they're getting their way. As a result, the dollar coming down, weaker economic news. Weaker dollar usually translates to good days for gold and silver, and it was a decent day. Gold up $8.50, $1,992.20 for an ounce of gold. Silver up 47 cents, $23.21 for an ounce of silver. I really think you can get a $2 pop on silver coming up real easy here. Metals prices reacting as they should to the falling dollar. Oil today coming back down to $1.95, settling at $80.51 for a barrel of West Texas Intermediate. And I just got the feeling that this price is still too high. I think we're going to end up ultimately, now there's always these X factors with wars in the Middle East and that kind of, the geopolitical stuff. But barring any big upsets there, I think we're going to get right back into that 70 to 75 trough with oil. I think that's where it's most comfortable. So we'll see. I wouldn't be betting millions on that, but it looks like oil wants to come down. The only time we've been seeing really any spikes at all is when we get any weird news from the Middle East. So we'll see where it goes, of course. Again, we're going to bring it to you guys. Bitcoin today, down $308. Still a strong number, 34,596 for Bitcoin. And that is just going just fine, right? Okay, I even kind of talked a little bit about jobs here. Last month revised down. The job market in one day looking a lot different than it did yesterday. The number coming in weak, they were expecting 170, which was pretty big fall from 336 last month. Basically they're only expecting half the job creation this month as we had last. Came in less than that. We still only, even though they revised last month's number down quite, 39,000 jobs, it's still, couldn't barely get to 50% of that this month. So right where the Fed wants it to be, they don't want to create, they say they don't want to create a recession, and they probably really don't. They probably believe in this Goldilocks scenario where a perfect landing can be achieved. I've never seen it happen, and I doubt I'm ever going to. But they can believe it and chase it. It's just the thing that struck me today that made me laugh the hardest was this upside down crazy bullshit where bad news is good news. And good news is bad news. And it's just, how in the hell can you work your portfolio when these are the way things are? It's bananas, man. It really is. But earnings for companies holding up steady, and through all the smoke and all of the crap that goes along with being an investor and watching these markets, the bottom line for stocks is always the same. Stocks are driven by the company's earnings, period, or prospects of future earnings or losses, right? So a company's earning a lot of money, they got a great product, great stock. Company not earning money or had a hot product that's no longer hot, or for whatever reason sales declining significantly, those are the cratering stocks. But it seems like companies doing okay when you see indexes rallying like this on a Friday, right? Typically Friday is a quiet day in the markets. People don't want to get stuck holding these securities over the weekend, especially when anything can happen over the weekend when you got wars going on around the world. They don't want to get caught flat-footed Monday morning. So surprising to see big rallies on a Friday like this. Now guys, I got to tell you, just to wrap this up this week, it's going to be a short video today. Don't forget the advice we've been giving you guys since the very, very, very first show. Now, I freely admit that this advice is very simple. There's nothing complex about it whatsoever, except actually doing it, okay? It's one of those, sounds easy, is a lot harder than it sounds, right? But if you've been doing the things we've been saying, you're doing okay right now in spite of inflation, in spite of recession, in spite of every other friggin' thing in this economy. Now, what have we been recommending to you guys from day one? Let's go through the list. Number one on the list. Number one, save up to 10% of your income, or as much as you possibly can without hurting yourself or not paying bills, okay? But trying to save your money is a good idea. What it does is it teaches you to live within your own means. Whatever you want to buy something that's more, go earn more. Simple, right? Don't spend money outside of your own means. Try to save 10% of your income if you can. It's not a gigantic number. It just isn't. It's hard to do, especially if you're not a saver right now. You know, to get started is the hard thing, right? And then they say when you're rowing a boat and the boat's sitting dead still, getting the boat started is way harder than when you're ripping across the lake and you can now keeping it going, right? So that's kind of the way you got to look at this stuff, guys. But bank money. Bank money. Hold on to some of the money you're earning. Second thing on the list, invest that money very conservatively. Especially if you don't have a gigantic portfolio you're watching over. If you're just getting started, or you have a modest portfolio, don't take chances. Don't reach. Don't go for big gains. Better a smaller return than a loss. Right? So invest your money conservatively, and if you can get access to it, look for the advice of people who are wise, who do this every day, who have proven track records to assist you in investing that money conservatively, right? Number 3, don't take on new debt except in a case of an absolute emergency. Don't go using credit cards to buy crap you might want. Don't take on new debt right now. Debt is very, very expensive, right? So don't take on new debt. Now, if something happens and your car breaks down and you got to have it for work and you don't have the money stashed, okay, you do that. You got to do that. But as far as the frivolous stuff, you know, let's go have a fancy dinner this weekend. Let's go out to the bar and let me, you know, charge up a couple $100 worth of drinks, which doesn't take long to do these days, right? So just be careful, you know, taking on new debt. Don't do it at all if you can possibly help it. Number 4 on the list, start to pay down existing debt you have, especially on credit cards. You do not want to be carrying credit card balances. The idea being get to zero balance. Get to zero balance. And then if you have to use that card, pay the balance off at the end of the month. So don't spend more on that card than you can pay at the end of the month. And pay that debt down, even if it's only an extra 10 or 20 bucks on that debt. Start chipping away at it. Start chipping away at it. Use the Dave Ramsey method. It's easy to find. You start with the smallest. You list your debts. You pay the minimum. Let's say you have 3 credit cards. One's $15,000, one's 10s, one's 5. Okay? You pay the minimum on the 15 to 10. You focus all your fire on the smallest one. When that one's done, you take the 15, you put the minimum on that, and you focus all your fire on the 10 till it's gone. And it's an easy way you work your way up the ladder paying that debt off. Get rid of that debt, man. Buy yourself some freedom by paying off your debt. Number 5, spend your money wisely. Spend your money conservatively. Spend your money thoughtfully. It's okay to spend money. Everybody has to buy stuff. Everybody has to buy stuff. Do it conservatively. Do it conservatively. If you're going to spend money, insist on value for that money. Get something that you can keep, right? That's the way I always judge if I'm getting value. Which is more valuable? You go to a store and you buy yourself a new shirt, or you go out to dinner and you spend the same 40 or 50 or whatever for that. In the long run, which is a better value for your money, right? So be cautious the way you spend your money. This is not the time to be impulsive right now. Watch out for the impulsive stuff, especially the impulsive stuff that comes with payments. And the last thing is then, if you're doing all these 5 things, the last thing to do is just enjoy your life. Because you're going to be living within your means. Your stash is going to be accumulating and growing every single month. You're going to have no new debt and be paying off your old debt. You're going to be able to sleep well at night knowing your investments are conservative and you're probably not going to take a giant hit, right? You're spending your money sensibly. You're getting the things you want and need, but you're cautiously blowing out the frivolous crap you don't. Anyway, guys, that's it for the day and the week. It's a crazy one. We'll be back on Monday to get a whole new week of crazy started. Everybody go enjoy the weekend. Spend time with your family, the people you love. The Bills got the Bengals this week. It's the late game on Sunday. Go Bills. Anyway, guys, have a great weekend. We'll be back on Monday. Till then, take care. Thanks.